Welcome back to our channel, fellow finance enthusiasts. Today, we'll be discussing the world of active investing, covering the pros and cons to help you decide if this strategy is the right fit for your investment goals. So, let's jump right in. What is active investing? Active investing is an approach where investors actively manage their portfolios, making buy and sell decisions based on market analysis, research, and their investment objectives. This strategy often involves frequent trading and hands-on portfolio management, with the goal of outperforming a specific benchmark or market index. Pros of active investing. Potential for higher returns. One of the main draws of active investing is the possibility of generating higher returns than passive strategies like index funds. By conducting thorough research and making informed decisions, active investors can identify undervalued assets or capitalize on market trends. Flexibility. Active investors can quickly adapt to changing market conditions, allowing them to seize opportunities and minimize losses. This flexibility can be particularly advantageous during periods of market volatility. Risk management. Active investing allows for better risk management through careful stock selection and diversification. Investors can focus on high-quality companies, industries they're knowledgeable about. Avoid overexposure to certain sectors or asset classes. Cons of active investing. Higher costs. Active investing typically comes with higher fees, as investors may need to pay for professional management or research resources. Additionally, more frequent trading can lead to increased transaction costs and potential tax implications. Time and effort. Actively managing a portfolio requires a significant amount of time and effort to research and monitor investments. This can be particularly challenging for individual investors with limited resources or experience. Performance risk. There's no guarantee that active investing will outperform passive strategies. In fact, many studies have shown that a majority of actively managed funds fail to beat their benchmark indexes over the long term. Deciding on the right strategy for you. When choosing between active and passive investing, consider your financial goals, risk tolerance, time horizon, and the amount of time and effort you're willing to dedicate to managing your investments. If you're interested in active investing but lack the time or expertise, you might consider working with a financial advisor or using a robo-advisor that incorporates active strategies. In conclusion, active investing can offer potential benefits like higher returns and greater flexibility. But it also comes with certain drawbacks, such as higher costs and the need for more hands-on management. Ultimately, the right strategy for you depends on your individual preferences, goals, and circumstances. Thanks for joining us today in exploring the pros and cons of active investing. Remember to like, share, and subscribe to our channel for more financial tips and advice.